Let me show you why investing matters. And it doesn't have to be rocket science. It can be simple things that you can do to help your money grow. Since 2015, in the UK, inflation is roughly up by 40%, and wages roughly between 35 and 45%. So more or less in line with inflation. But crucially, wages are not outstripping inflation. Now look at what's happened to the house prices in the last decade. House price growth has substantially outstripped inflation, with house price growth within the last decade at 60 to 63%. But entry cost for housing is higher, and that can act as a barrier to entry for many people. And that brings us onto the index funds, such as the S&P 500 and MSCI All Countries World Index. Let's look at the S&P 500 index fund. Including the dividends reinvested from 2015 to 2025, it's approximately up by 331%. £10,000 invested at the start of 2025 would be worth around £43,000 today. That's the power of owning productive assets. Now compare that to cash. Cash feels safe, but it quietly loses value year on year. Why? Because anything that can be created easily becomes less scarce, and central banks can increase the money supply when needed. More money in the system over time means each unit buys less. That's inflation. Now, importantly, past performances do not guarantee future returns. Markets go up, markets go down. There were negative years within this period. This isn't about hype, it's about understanding one principle. If your money grows slower than inflation, you are getting poorer in real terms. The goal isn't to gamble, it's to invest intelligently. Think long term, use compounding in your favor, because when you own assets that grow, your money works, and if you don't make it work, inflation will work against you.